grinding all my life. Sacrifice, hustle paid the price. Want a slice, got to roll the dice. That's why all my life I've been grinding all my life. Look, all my life, been grinding all my life. Sacrifice, hustle paid the price. Want a slice, got to roll the dice. That's why all my life I've been grinding all my life.
Apologies, guys, I've been muted. So I was just saying, the news that I think the Australian share market hasn't reacted enough to today is the tariffs that possibly will be imposed on Australia by Beijing or China broadly, and this is aimed mostly at rumoured to be beef and some other markets, but I think this is largely a retaliation to the Australian inquiry into how China sort of handled the coronavirus. We all heard about how the numbers that came out, they were revised upwards, and China has been pretty not the most transparent with the whole handling of the situation. It's all allegations and it's still to be proven, but I think that there's a lot to be found in the investigation. But anyway, Australia has sort of taken that step, and I think in response, China is sort of doing their own way of clamping down on Australia and trying to bring a little bit of pain to the Australian economy. And this news came out this morning, and we saw the Australian dollar fall because of the weakness that it poses to the Australian economy. If the Australia as a whole is going to get less for their exports, it's going to have an impact on the Aussie dollar. But because of this, we saw some stocks that are focused around some of those sectors, agricultural stocks mainly. GrainCorp, they fell 3.5%. Australian Agricultural Co., which I think mostly in the beef market, they fell 3.7%. Nufarm, which Nufarm I think sells and distributes like pesticides and different products for the use on agricultural applications. They fell 1%, and Elders, which is a company that's very geared towards the agricultural sector, I think they provide some finances for it, but also the sale of products, and within the beef market they do a lot. So Elders sort of operates a lot within the your cattle markets, and that they'll have they'll take a commission on sales and that sort of thing. They fell 2.3%. So it's definitely a big whack. I might just turn this light away a bit. So let's see if that helps, or it might actually be my screen. Sorry, what was I talking about? Yeah, it's hitting the agricultural stocks a lot, but I think there is a broader market that will see this effect as well. We have a lot of different products that are exported into China. I know Treasury Wine Estates, for one, is a business that has really expanded in China with their sale of expensive wines. And businesses like that, China will know that if they clamp down on those, that will really hurt Australian businesses. So they'll be looking to place tariffs on businesses like that. A2 Milk, they're expanding in China. Bubs, another infant formula company that a huge amount of growth potential in China. And China just needs to implement some tariffs on those sort of products, and it just wipes out that growth for those Australian players. And we saw, just speaking of the infant formula, just let me know if I'm coming through clearly, guys. I think I might have a little bit of a slow internet tonight, so just let me know if it's playing up in the comments, or if it's all good. Just give me a thumbs up. Don't want to be ranting on and then half an hour later find out that none of it made sense. It was all low quality. Just let me know. Sorry guys, I'm just going to check that it's still coming through decently before I go too far into it all. Okay, I think we might be all right. Keep chugging along. Possibly. All right, we'll keep going. So yeah, I think tariffs could be implemented in a big way, and that will hit an already fragile economy at the moment. So I'd be very wary of putting money into the market over the coming week or two, just to see how this pans out in the short term, because this could have a really big impact if China goes ahead with the tariffs, and just to what extent that they may be implemented. So that's just a little bit of my thoughts across that. We had plenty of updates from Australian companies today from the ASX, and I'll go through a few of them just to keep you updated. So Altium, which, if you don't know Altium, they are a provider of a software for basically, in most cases, engineers to design computer control boards, chip boards, and that sort of thing. So their software has taken off over the last probably few years or so. It's really taken off, and Altium is one of those high growth tech plays within the Australian share market. And they came out today, and I might even have, no, I don't think I've got the announcement open, but I've got this one here. They're sort of informing investors to brace for fourth quarter hit due to the coronavirus, and not in the way that people may expect. So it's not a case of the coronavirus has had a direct impact on the demand of their particular product or their software. It's more because of the companies that utilize their software. A lot of those small to medium-sized businesses that utilize their software will be undertaking that capital preservation in order to ensure that they get through this uncertain economic time. So where costs can be cut, and software for a lot of these small consulting engineering firms, the designers, software is one of the biggest expenses aside from your employees. So if there's an opportunity to downsize on the software package, potentially, maybe not all the pieces of software are necessary, maybe they get rid of some of the add-ons, they're going to cut costs where they can. So the CEO, Aram Merkazemi, I probably butchered his name, but anyway, he came out and sort of said, due to this capital preservation within the small to medium companies, we can expect to see a softer fourth quarter, which is tough for a lot of people that, take the chance on these high growth tech plays, because their revenue are typically growing at double digit rates. We're probably going to see, we might still see double digit growth from a company like Altium, but it will be a lot softer than what we'd typically see from them. But that's the news that came out from Altium today, and we had ZipPay come out with a market trading update. So Zip has came out and said that monthly revenue increased 81% year over year for the month ending of 30th of April, and monthly transaction volume of nearly 182 million, which is up 86% year over year. Receivables of $1.2 billion, which is nearly double year over year growth. It's just some massive figures there. Customer numbers increased to 2 million, which is up 66%. And merchant numbers increased by 23,000, up 50%. So across the board, we're just seeing some huge growth for ZipPay, and pretty much the whole buy now, pay later sector. All these buy now, pay later providers have seemed to benefited from the coronavirus. And I saw a report come out that there's been a 7% decline in actual credit cards. So people are sort of veering away from the traditional means of credit in the form of credit cards from banks to these buy now, pay later providers. During this uncertain economic time, people, and particularly due to JobKeeper and JobSeeker, the government payment, stimulus in order to keep the economy somewhat at a reasonable level. That is providing enough discretionary or non-discretionary, discretionary expenditure for people to continue buying things that you may not necessarily need, but you wouldn't mind having. And because the retailers are being shut and you can't really, or you may want to steer clear of shops where you can, people have been buying online. And when you buy things online, most big online retailers have your buy now, pay later providers on their platform. And for some people that may have enough money to buy something, but they're a little bit uncertain still of how they'll be situated in 2 weeks, in a month, in 2 months, 3 months, they don't really want to commit all that money straight away. And also they don't typically want to use a credit card where they know if they get themselves stuck in a month's time or 2 months' time, or whatever their time frame is in that they have to pay that money off their credit card, they don't want to be in the position where they have to pay excessive interest rates on their credit cards. So a lot of people are turning, and older people even, it's really pushing for the adoption of the buy now, pay later platforms, so or services. So people are wanting to use that where there's no interest really on it for, in a lot of cases, more time, or they're a lot more flexible than that of a typical credit provider. So that's why we're seeing such enormous growth in these companies like ZipPay, as we see here. Their net bad debts were 2%, which is, by their statement, it significantly outperforms the market. If you look at a lot of these banks with credit cards, they probably do in fact have far more than 2% of bad debt. That's why we see businesses that literally all they do is provide advice and payment solutions in order to get out of their bad debt that they've got through multiple credit cards and that sort of thing, because credit cards just once you're in debt with credit card, it's very hard to get out because of the huge interest that you have to pay on them. So yeah, this update was really a really good update from ZipPay, and I think you'd pretty much expect this across the board with most buy now, pay later providers. So moving on from that one, we got an update from Kogan as well. I actually hold Kogan in my portfolio, and I have for at least a year now, I think. I've held it when it was down 30-40%, and it was down around $3 something, and I've still got it all. Didn't sell any of my shares, still got it now. We're currently sitting at $8.85. So little disclaimer there, I do own shares in Kogan, so just put that fully out there. Don't go buying into Kogan based on any optimism that I show on it, because obviously I'm a little bit biased. But yeah, they provided a business update, which really was really positive. Kogan grew active customers by 1.95 million. Grew them to 1.95 million. Let's not go get too excited. Don't go buying Kogan shares just because I think they're great. So 1.95 million as at 30th of April, with an incremental 139,000 active customers in the month of April. Gross sales grew by more than 100%, and gross profit grew by more than 150%. Adjusted EBITDA grew by more than 200%, and financial year to date adjusted EBITDA to the end of April grew by more than 40%. They also appended onto this market update a little bit of info about option grants that are to be given to the CEO, Ruslan Kogan, and also the CFO, and well, he's got a few roles, CFO, COO, David Schaefer. So they've proposed that Ruslan Kogan will get 3.6 million options with an exercise price of the 3-month volume weighted average price ending 30th of April 2020. Vesting condition: not having resigned prior to approval of the full year 2023 financial report. So, and the same conditions apply to David Schaefer, but with 2.4 million options. So basically, this is saying that as long as these two gentlemen stay with the company in their roles, doing their job for the next 3 years, they will get 2.4 and 3.6 million options, which works out to be at the current price. I think I saw it reposted it on Twitter today, about $8.5 million, which is crazy. I can understand that you got to incentivize your high up in the company that have enabled the company to progress and evolve and successfully capitalize on their business plan. But I don't know, in my opinion, I think it's somewhat excessive. Options, if you don't know what options are a little bit different to ordinary shares. You can buy and sell options, you can trade options. They're a lot higher risk. You have call options, you have put options. In this case, it would be a call option that is being given to these two gentlemen. A call option basically enables you to buy it's the option. It gives you the right and the obligation, or not the obligation, you don't have to do it, but it gives you the right in order to exercise that option. Say, look, I've got one option, which normally one option gives you the entitlement to 100 shares. So you've got, you hand over your call option and say, look, this call option has a strike price, whatever it may be. If the current share price is $8 or whatever, you might have a call option that's at the current price, so that in 3 years' time, when hopefully the share price is maybe, who knows, could be say $15, for example, you have the option to exercise that and say, I want to buy these shares at the strike price of the option, which would be probably at the current price, $8.80, $8.85. So then you can buy the shares at $8.85 and immediately turn around and sell them at market price at $15. So you're basically doubling your money straight away. So I think it's a little bit over the top, but they can do what they see fit, and that's why every shareholder has the opportunity to vote on a lot of these things when it comes up to the calls that they have, the investor calls, and you can lodge your vote prior. And strongly urge, if you're actively sort of within the company's news and keeping up with it all, strongly urge you to actually have your vote heard vote on the remuneration, proposed remuneration for the board and the CEO. Be active in companies that you put your money in. If you're going to have $3,000, $5,000, $10,000 in a company, you ought to be having your say in how you think that company should be run. You can vote on whether a CEO is re-elected, and if you think the CEO has been absolutely rubbish, you vote against it, and have your voice heard, and you've put the money on the line, so you may as well have your say in the company. But anyway, that's a market update from Kogan, and pretty optimistic with the results that they've seen over the last month. And then we've got CSR now. CSR is the supplier of, or the manufacturer and supplier of building materials. So they have a few different products. If I just go down to here, yeah, so they've got lightweight systems like your Chiprock, Cemetel. These are just their own brand names, but Gyprock, like Gyprock board and that sort of thing. Bradford, I know the Bradford brand is insulation products, and amongst other things. But yeah, bricks and pavers as well, a smaller portion of their business, and I believe they also dabble a little bit in aluminium production, I believe. Another disclaimer, I own shares in CSR as well. So just to make that fully transparent. But they came out with their full year results report and presentation for the year ended 31st of March 2020, and I'll just quickly skim over some of their results and forward outlook for the company. So highlights: we got statutory net profit after tax of 125 million, which is down 10% for continuing operations. Building products revenue down 6%. Aluminium we had a earnings before interest and tax of 60 million, which is up 63% following significant decline in the Australian dollar and lower input costs. And apparently in property a little bit as well. Horsley Park transaction announced in November 2019, on track to deliver $80 million in proceeds. I honestly am not fully aware of what that is, Horsley Park. I should be, but I'll probably look into that. So I'll just go down to this one here, and we've got, trading revenue down 5%. We've got net profit after tax from continuing operations down 26%, statutory down 10%, total statutory net profit after tax up 61%. So 125 million up from 78, and CSR shares really rallied on this today, up 10%. The stock had been beaten down, due to the coronavirus, but the residential market hasn't been the best already before even coronavirus hit it, and investors were sort of getting out of the stock because when the economy looks weak, you wouldn't expect that the residential market would be nearly non-existent. People aren't going to be remortgaging their homes or drawing down on their mortgage to do renovations when they don't even know if they're going to have money coming in the door in order to pay for that mortgage the following week. So the residential market really takes quite a hit, and their more commercial facing side of the business is also impacted. not to the same extent, because we've seen that the construction industry has, for the most part, maintained operations through this. But looking forward, you have a lot of the people that have the money, your capital, your capital funds, wealthy individuals who are seeking to put their money in something. They're the people and the funds, the companies that are the ones that propose a new development and sink all this money into some new building, which then CSR obviously provides materials for. So when you don't have the same sort of optimism within the economy, funds and even wealthy individuals aren't going to be throwing their money out trying to build some new ritzy building. So investors really were selling out of the share because of that. But this report has obviously, to investors, sort of panned out not as bad as what original thinking or the original thoughts on the business were. So I'll just scroll down to the part where they talk about forward outlook, if they have it. Key priorities for the year ahead. Yeah, that's probably it. That's pretty much some mumbo jumbo, really. It's just the little, just the crap that the companies like to say to make them sound like they're doing good things. Trying to look for some actual substantial information. Health and safety of employees always first priority. Yeah, everybody says that. May not actually be the truth though. Product and technical support customers with technical installation advice on products and systems. Pretty stock standard. Maybe there's some of this here. Building products revenue for the first 6 weeks of year ending March 2021 down 3%. I don't know if that's a typo. While COVID-19 has not had an impact on the results to date, we anticipate there will be a slowdown in demand this year. However, the timing and extent is uncertain. So they're sort of saying that, who knows how this could pan out, how long it might be, how the economy will recover when people will start putting money back into building projects. This delivery of Horsley Park Stage 2 industrial project, which I'm not too sure what that is, honestly. 80 million in sale proceeds and 53 million in earnings before interest and tax, with second tranche in year ending of 2023. As of 30th of April 2020, 63% of net aluminium exposure for the year ending of 2021 is hedged at an average price of $2,826 per tonne, and no earnings guidance to be provided for CSR Group due to market uncertainty. That's every company saying that at the moment. You can't really predict how earnings will pan out looking forward. So that's the CSR report for 2020. If you're interested in the building materials sector as an investment, I would give CSR a look. Who knows? I'm not going to say whether to buy it or not, but I think it's one of the biggest plays in the building materials sector in Australia. So if that's something that you're sort of interested in, having some financial exposure to, I'd give CSR a look and have a thorough read through their results presentation. And unlike me, actually understand everything about the business. Read into like what this Horsley Park business is. So CSR results presentation, there it is. We've done it. We've covered it. Let's move on So Saudi Aramco, they have reported first quarter profit has slid 25% as the collapse in oil prices bites. I mean, this was to be expected when you have oil prices go negative and no one actually using fuel, no one's driving around. We'll see this start to pick back up, and the oil price has recovered fairly substantially. I think it's sitting around $20 US per barrel at the moment. But yeah, so they reported 25% fall in net income for the first quarter, and what else have they said? They're still going to pay a dividend of $18.75 billion in the first quarter, despite the fall in profit, which is pretty crazy. I mean, they must have a lot of money on the balance sheet, because, yeah, am I reading that right? They're actually paying out more in dividend than what they actually had in profits. If I'm reading that right, I could be wrong. 16.6, I think they are, which is never a good thing. As a business, long-term capital preservation is first and foremost. I mean, you may have a different opinion, particularly if you're someone holding the stock and you want that dividend. But myself as an investor, I have no issue with the companies that have cut their dividend. I hold plenty of stocks that pay a dividend, and they've cut their dividend completely, or they've said that they've deferred it, and I have no issue with that, because I know that long term, which I hold these companies for a long term gain. Long term, that's the best move for the company. I don't want the company to pay me a dividend just to turn around and say that they're bankrupt 6 months later. So, in my opinion, that's a little bit off the rails. I don't know. Saudi Aramco probably has plenty of cash, so it's probably all right for them. But it's just interesting to see. Second quarter is where we're going to start to see the full effects of the demand crisis and the demand shock on Aramco. So we haven't fully seen the full extent of this yet, and it's only going to get worse. It's a lagging market, and just to paint this picture of how much oversupply we have of oil, let's just have a look at this little video. So yeah, we have oil storage, I don't know what you call them, oil storage tanks that are just honestly overflowing with oil. That's just how much oil there is. And you can't just build a storage facility in the click of your fingers, and the people that are pumping the oil out of the ground aren't willing to shut it off, because it actually costs a lot more money to shut off the oil well, and can have some disruptions to the oil. I read apparently that if you actually cap off the oil well, you risk never actually getting the same level of oil generation out of that well again. So in most cases, they're not cutting these oil wells. They're still pumping it out. They're still, for the most part, trying to put it somewhere, like in these oil tank storage facilities. We've seen the run up in the oil tankers, the actual vessels that transport the oil, usually, that are acting as just storage facilities at the moment. So it's in the near term looking like oil will continue to be in a case of oversupply with little demand. And I'll probably end it on just a quick glance over the US most anticipated earnings this week. So we've already missed the Monday market. That was last night. We had Under Armour reporting, Tilray, Logitech. I'm just naming some of the ones that stand out to me. But tonight we'll have not a whole lot of big names there. Honda, Casper, those mattresses. There's not a whole heap of big names this week. We got Cisco on Wednesday. I'll probably be paying attention to that one. Revolve Group, they own. They're like an online retailer of clothing. They're really big on using like Instagram influencers to sell their products and really rapidly growing their revenue. So I'll be looking at Revolve. I think they'll actually really surprise to the upside. I might even try to do a little bit of a day trade with the CFDs on Revolve. I think they really could pop up 5-10% with their earnings report. So it'll be interesting to watch those ones. I'd keep an eye on them. Thursday we've got Wix.com, not a big one. Norwegian Cruise Lines, that'll be one to watch. We'll see whether they fall on how weak their revenues will be, considering that they haven't been able to operate, or will we see it sort of push up because it won't turn out as bad as what's expected. But that'll be one to watch to see how it performs. Friday got JD.com, but yeah, not a whole lot of big plays this week on the US market. The big one for me will probably be Revolve. I'll be watching that one. I'll let you know how that one goes, because it'll be interesting with Revolve. And I'd check out the company if you're interested in a really good growth play within the online retail. Revolve is probably one of the best ones in the US market, so give that one a look. We'll just jump across and have a look at what the US market is doing in the pre-trading. Where it's sort of flat, might push upwards through the night. We had a down day last night for the US market, so we might see a flat or maybe a slightly positive night tonight, but we'll see how that pans out. Also, I'll just lastly quickly touch on Bitcoin. If you're interested in Bitcoin, we had the Bitcoin halving take place last night. If you're not a big fan of Bitcoin, then you can probably just tune out now. But Bitcoin halving is basically every it's actually not on a time basis. It's based on the number of blocks mined, but I think it's roughly every 4 years. They actually halve the total reward in Bitcoins when the blocks when the transactions are authenticated on the blockchain. So the miners get a reward for that. And previously, what was it? Previously it was 2.5. Now it's as of last night, it's now 6.25, and that's built into the system that in the long term you're gradually actually lowering your supply of the currency. So unlike the Federal Reserve at the moment, or the RBA, where we're just printing out new money like it's nothing, and we've got devaluation of the currency, Bitcoin actually has programmed into it that there is a cap of 21 million Bitcoins, and that is it forever, no more Bitcoins. And we have a gradually limiting supply. So that should increase if demand stays relatively the same, but supply is decreasing, then that should result in an incline in the actual value of the coin itself. So we had the halving last night, and from past halvings, we've normally seen that about a year and a half later, a real run up in the actual value of Bitcoin. And we're talking like ridiculous 20, 50, 100 times of the value of the coin. So I hold a little bit of Bitcoin in my investments. Always worth having a small exposure to a speculative investment. So I have a small holding of Bitcoin. I actually recently sold out of nearly all of my altcoins and converted them to Bitcoin, because I think Bitcoin has the best, the best system for actual increase in value and the widest adoption. I mean, you talk cryptocurrency, most people know Bitcoin. If you ask a random person in the street, cryptocurrencies, you say Bitcoin, they'll say yeah. You say, how about Omis Go or Tron? Most people will be like, what are you talking about, bro? Like, what is this? Tron. So I think long term, Bitcoin's probably the better one to hold. So that's a little update on Bitcoin. Thought I'd throw that one in. So I think I'll end it there, guys. Unless there's some questions on the stream tonight, which I'm happy to answer if there is. I better actually pull up the stream. I haven't been watching it. Could be, yeah, we've already got. Oh yeah. So Justin's comments. One option is usually one share in these cases. Possibly. I'm pretty sure one option is normally 100 shares. I could be wrong, but just trying to think. Research markets. I could be wrong, but I think it is one option gives you the right to 100 shares. I've been following some options trading quite a lot recently, and I'm planning to get into it quite heavily. So stay tuned for that, because I'll probably keep you guys updated on how that transpires, what I learn from the experience. I think it's always good to keep learning new skills, keep learning new things about the financial realm. We're not taught enough about finances in school, so it's all about self-education. So that will be my new little knowledge endeavor. If you got any questions, guys, just flick it into the comments. Happy to answer. Also, I'll let you know that I will have a short downloadable PDF in the next couple of weeks, where I'll be compiling some stocks that I personally am looking at with some interest, and just doing a bit of an analysis on it. By no means are they a recommendation to buy them or sell them or anything like that. But I think it's valuable to always have some resource that gives you ideas on stocks. It might, just by looking at it, you might find a company that you've never heard of before, and you might give it a look and think it sounds like it might fit in your portfolio. But yeah, it's just going to be a short little report, 10 stocks that I think are of interest. and I'll just do a bit of an analysis on each one and compile it in a PDF. So I'll be flicking that out for free, no charge on that, just to help out the people that follow the channel. I want to give back to the people that have been following, so look out for that in the coming weeks. And I'll keep you updated. I'll post it on Facebook, in the private Discord group, across all the channels. So if there's no other questions, guys, thanks for joining us, and I will catch you in the next one. Cheers.